Welcome to the Planet MicroCap Showcase Virtual 2022. I'm your host, Robert Kraft, and thank you for joining us. Our next presenter here at our event is Brian Balbirnie, President and CEO of Issuer Direct. It's a publicly traded company. The symbol is ISDR on the NYSE American. Brian, take it away.
Thank you. I appreciate it. Look forward to talking to everybody today and doing some one-on-ones here through the event this week. As Bobby said, name is Brian Balbirnie. I am the founder and CEO of Issuer Direct. We are the compliance company, as folks know us as. And over the next 20 or 30 minutes, I'm going to get to tell you a little bit more about some of the things that we're doing here as a business, some of the things that we recently did here at the beginning of November that we're super excited about, and maybe how that plays into our business over the next couple of years. I wouldn't be doing my job if I didn't give you the forward-looking statements. These are available at the bottom of each one of our press releases and our regulatory 10Q and K filings. I would guide you to the SEC website and to our corporate website to visit these forward-looking statements, financial information, investor decks and materials, and feel free to register for updates and things that we're doing throughout the organizations and markets. But let's take a step back. For folks that don't know us, me, the business, who is Issuer Direct? We're a platform communications company that helps thousands of customers through the process of telling their story to millions of people. And I know that sounds very highfalutin and not very detailed, but really at the cusp, what we do is we build technologies to allow public and private companies to curate a message, something of importance to them, and distribute it through our proprietary ecosystems, through the SEC, the ISDR system, the RNS London Stock Exchange systems, every regulatory exchange, and every one of the biggest emerging markets here in the globe today, as well as every financial platform and system, and direct to the desktops of over 3.5 million investors. And so customers rely upon our platforms to understand the engagements of what that messaging is, understand where they're getting the biggest reach and interest, and how that ties back to shareholders and interested shareholders, and even maybe potential customers and partners. So we're excited about this technology we've been building for the 16-year history. As a result of a transaction we did announced November 3rd, we're now up to 150 employees around the globe. Started the business in 2006. And so one of the things you'll notice about 100 million market cap we are today, we're very unique in some ways. Insider ownership is about 26%. I'm the largest shareholder still today and still continue to buy shares and be a part of this long term. People say to me all the time, what's your horizon? And I say, I feel like I just woke up, started, and I've got another 10 to 20 years left in this. And we're all passionate. Our director of ops has been here 12 years. Our vice president of business development since the start. We've got employees that are ticking around the 10-year mark and greater, which is very flattering for us as a business. One of the other accolades that I think is important from financial metrics and analysis perspective over investing or making an investment decision in a microcap company is cash flows from operations. You go examine our balance sheets and cash flow statements. We've had 32 consecutive quarters of positive cash flow from operations. Very unique. Raised capital once in the business, about 3.8 million shares issued outstanding. There's no preferred class shares. There's no warrants. There's no craziness on our equity structure. And I think I looked back the other day with my CFO, and in our time, in 16 years, we have repurchased, bought back, and/or paid dividends in excess of $12.5 million in the time since we started this. And so most recently, we just completed a $5 million repurchase program. We obviously had said to our shareholder base in the markets, as we look out to M&A, we're going to utilize our capital the best way we possibly can, knowing that our share price was in and around the mid-20s. Almost 18 months ago, we embarked upon that buyback program, believing that our share price was undervalued, our business wasn't valued correctly, spent that prudently throughout the period, and now have turned our focus entirely to the transaction that we just did that we'll talk about in a few minutes. So what do we sell, right? We talked about the business at a high level, but how do we generate income, right? What are we really doing as a business, and where do we see the business going, and what are the products that we need? And I've been using an analogy lately is we need products that are stable. We need to be able to have a bigger depth of offering to our customer, both public and private, as we want to go through and build critical mass in the industry. So folks know us by AccessWire. That's the fourth largest North American newswire today. Now with the transaction with Newswire, it accounts for 5% of the news daily traffic volume globally. Our webcasting platform drives events like this. It also drives events for earnings calls, annual meetings, investor days. and deal non-deal roadshows as a result of folks doing a lot more virtually. Our events and webcasting product platforms have become very important to us. And something we talked about in the last couple of earnings calls and in our messaging and presentations and meetings with investors is our investor relations and newsroom websites are a driving force. We have over 500 customers now using that product of ours, both meeting both ADA compliance, investor relations compliance for CDR, SEC, and exchanges, driving stock information, news information, corporate vitals, presentations, transcripts, you name it. The places that we all go as investors to learn about a company, ir.thatcompanyname.com or whatever the URL is, we're driving a good part of that. We have over 20% of the active microcap companies are using our investor relations product platforms today in some fashion. Sometimes we manage the entire process. Sometimes we deliver API feeds to them. A growing part of our business. We'll end the year this year, probably 30% growth in that product category, which is the largest growth we've ever had as we start to see some change in that industry and the IR website business. So we're very excited about continuing to invest in that over the next couple of years. And then lastly, something I just talked about, earnings calls, AGM, non-deal roadshows, building conference and special events products for folks. We do that for folks like Columbia Sportswear and Sherwin-Williams and Dell and the IRS, the Federal Reserve. So we've got, from a government perspective and an enterprise perspective, the largest that are possibly available out there, competing with the world's largest, peers in our space. And then we also are then very, very focused on the non-bull bracket banks, helping them with deal and non-deal roadshow events virtually. And then every company that needs to have an annual meeting and what that means to them and how we can customize those solutions. And to the right side of your screen, this is our founding principles, where we started. We were the compliance company. We built regulatory product first, our EDGAR product that will be called Blueprint, helping customers comply with SEC and CDR in Canada as their regulatory platform of choice. There's a few hundred customers that still do that with us today. And that always embarks upon what an annual meeting is, printing an annual report, a proxy statement, mailing it to shareholders. We all get those in the mail or our email boxes, and then managing all the ownership. And then what is becoming a faster growing product for us is our whistleblower solution that is powered for the New York Stock Exchange. We're an exclusive compliance whistleblower product platform for every NYSE listed company and soon to be RNS or London Stock Exchange listed company as well. So we talk about this kind of tongue in cheek. We've messaged for the last 2 years that our compliance business, as communications grows, compliance will tend to decrease at a single digit rate. As I continue to say that and will continue to tell you that, it has actually outperformed and grown at a single digit rate during that time. So I don't want to jinx ourselves. We're going to continue to tell you that it's going to decrease and that business is going to continue to increase for us. But let's take a step back. Prior to November, Issuer Direct had about 3,500 customers, public and private all over the world. With the acquisition of Newswire, which we'll talk about in a few minutes, we're up over 6,500 customers and likely finish the year at over 7,000 customers. 1,000 of those customers or more will be subscribing to our product platforms, driving that top line margins, driving that LTV and customer lifetime values, and building us to a position of which we can then take these new products in our stable, such as media database and analytics and enrichment tools, to be able to sell into our client base at Issuer Direct, that what Newswire brings us. So you can see some of the logos on the screen. These are some of our larger accounts and some small ones that we work with. I couldn't possibly fill them all there, but it gives you a kind of an understanding that we are industry and market cap agnostic. Some of the largest private bands in the country work with us as well. So we tend to look at customers that are looking to find product technologies and solutions that are best of breed at an economic value that fits their budget. And that's where we win all the time. It's not about focusing on a particular price point to be the low cost leader. We don't want to be that anymore. It's not that we're trying to focus on a certain industry and or sector, because we want to be insulated from any economic corrections that may or may not happen. So as we go forward and we think about Issuer Direct today being a communications company that's focused on news distribution and very public company products, right? Investor relations websites and earnings call and event products, we want to turn our focus a little bit to think about the market that we're not serving. And so I'm going to give you some data points that will help you understand why we feel passionately about this. In the news distribution space, I've said this before, the total spend last year on press releases, news distribution, is about $700 million. That's globally. The communications industry, as it's defined by the products you see on the screen, is about 2.5 billion. But more specifically, in the news space, only about 175 million of it is driven from public companies. The rest is driven from other industry and private throughout the world. And we are not managing or getting to that total addressable market. By acquiring the business called newswire.com, pressrelease.com, and the businesses associated with what they've built there, gives us an opportunity to understand how private companies consume news, how they buy media databases, and why they need monitoring and analytics, and taking that into this broader spectrum. So as we settle in the integration, it gives our combined businesses and brands the opportunity to reach that potential audience. So today, when I say to you that we have 5% of the market, and I had messaged back last year that we'd reach that by the end of 2023, we're there before the end of 2022. Our goal now sight is by the end of 2024 to account for 10% of the news market globally or greater. And we're going to do that by having these additional products and services along with us to sell our customers in more of a subscription way rather than a productized way. And those include media database, as they're highlighted on the screen and underlined, monitoring and analytics, and media advantage subscriptions. And I'll talk a little bit about each one of these products. In a media database way, typically folks will buy a media database to understand who to target and understand how to get their message out to a particular audience. Currently today, I'm in our corporate office in Raleigh, North Carolina. I want to know every single publisher, writer, journalist, and anybody associated with newspapers, trade publications, and magazines in my area. But I also want to do it in markets I want to grow. And that's where media databases come in. You can search our media database by particular regions, cities, states, and countries, whatever you'd like. You can also do it by publication types. You could do it by job title types. And you can pull down these individuals in our platform and build campaigns for each one of them. And folks who know the marketing world and a campaign management tool, our platform does A/B testing. So you can send different messages to different groups of people to get them engaged. You can send direct links to your newsroom to get them to subscribe. You could send meeting requests into them as well, which is part of our technology that we're developing through this acquisition to be able to engage media and then provide all the analytics like you would typically get in an email campaign, but also more driven in a very different way. Majority of the competitors in the space today providing a media database will allow you to market and download the data. That's not a bad thing. You and anything in life, you get what you pay for. And you're going to spend $5,000 to $15,000 with a competitor for a media database product, and they're going to let you download the data, and you're going to do something with it in Excel, in MailChimp, whatever it is you're going to use to begin to market to these people. And I'm going to be perfectly honest with you that most microcap, small cap, and even private companies don't have the bandwidth for anybody to do that. If I went down the hall to my marketing team and said, here's a group of media I want you to focus on, take my message and send it to them. But send it to them when I send the press release out, and it may or may not be synchronized. The marketing people are going to look at me like I have two heads, and they won't do it. And so therefore, I'm disenfranchised of what the results I've got on my message. My message can be important. I just bought Newswire on November 3rd. Wonderful message. I released a new product offering. I hired a new key executive. Whatever the message is for a company, you need to have an ecosystem that does it all in one place. And that, for folks that know the Issuer Direct model, that's what we've been about for years. It has been about bringing our customers and their constituent base to one ecosystem to be more efficient at time value of money, one contact, one check, one platform. And we're going to continue to use that methodology in everything that we do. So what we're going to allow our customers to do is to synchronize our media database with their back office tools. The most predominant in the world that we live today is Salesforce and HubSpot. We're going to build connections, and I've already started building connections with those tools to allow asynchronous back and forth of media professional data and analytics, so they can push live to a desktop in Salesforce and or HubSpot to tell our customer and the user exactly who's engaging, what they're engaging with, and what the last article they wrote in the publication that ties to their industry and sector, and if their name was mentioned, personal name, company name, product name, whatever it is, that monitoring system is constantly scouring the web at about 30 million pages a month, looking for all this data. That product exists today with Newswire and will be available inside our entire ecosystem here by Q1 of next year. So those are very exciting products. What that does, right? So now we talked about the product side. I'm a little geeked on that. Let's talk about the economic and where that benefits the company, right? From a revenue perspective. Today, our subscribers spend about $7,000 average a year. The Newswire subscribers, meaning customers that subscribe to subscription products at Newswire, is likely about $8,000 to $9,000 average a year. When we take the media products we talked about, monitoring, analytics, and database, that is valued at another $500 to $7,500, that we're going to have the ability almost to double the average revenue per user on our side as a core issuer direct or access wire customer. So from a top line revenue perspective, that's significant opportunities for growth for us. Today, our communications business accounts for 70%. As successful and planned, if we get the business to 40 million next year, like we plan to be, from what our numbers are today at about the mid 30s, we're going to see our communications business climb to about 82 to 85% of our total revenue. And that's important for us, right? As we build scale, that is the focus. Newswire is a wonderful organization for us to have acquired. Good domain properties, good customers, good revenue streams, and stickiness. But it's not the only transaction we're going to do. We continue to look at ways to find other bolt-on, very accretive deals like the Newswire transaction is to us. Some of this data I've talked about, some of it I shared. It's obviously in our filings, gives you a look back of revenue trends over the prior 5 quarters to see where communications and compliance are making up part of our business. And I would tell you that pre-COVID, when we said that the compliance business would shrink, our indicators in the market were absolutely correct. What we didn't estimate for, and I think we all discovered this, right? And Wall Street Bets is a big part of this, is that when folks were at home and they ended up going to the markets to invest, the number of retail shareholders that came about in these companies went up by 300, 500, 1,000%. And so a lot of the revenue is driven from our compliance business is driven based on the number of shareholders. And so that did drive the revenue there. And that resulted in why we had increases and not decreases in that category that we spoke about. We plan to file pro forma financial statements on the Newswire and combined issuer direct businesses by the end of this year, which is within the prescribed time that the SEC allows for a transaction to do. You're going to be able to then kind of extrapolate what the business does on an annual run rate, where you'll see our revenue sit, kind of $34 million, $35 million range if you're to look back in a 12-month period of what the combined businesses would look like. Top line margins likely going to be in the mid to high 70s, and EBITDA margins in and around the 20s. So very aligned with what issuer direct typically delivers and generates. We talked about news market reaching 5%, surpassing about 1,000 customers in our subscription product. Again, another metric KPI that we put out to our shareholders and said that we'd meet by the end of the year. We've already met it as a result of this transaction here in November. So goal guidance to get to 10% by 2024 in market of news, and to get our subscription customers from 1,000 to 2,000 in that same period of time. So you see the commitment for us, the investment that we're making. And so now let's talk a little bit about the economic of what Newswire did for us. The Newswire brand consists of newswire.com, pressrelease.com, media database, and media analytics systems and technologies. About 3,000 customers, about 13 million in top line revenue. We paid $43.9 million for the business. A fair multiple to revenue based on other transactions we've done. Less multiple to revenue in this deal than anything else done in our industry in the last 3 years. So for folks that know us, we've been sitting on a pile of cash for a long period of time, trying to figure out what to do. Found the right asset and used the money very, very carefully. So 18 million of cash at close, $22 million seller note. That's a 12-month note at 6% interest. Given the markets and the debt markets today, that's a good interest rate. So we're going to address that in a long-term nature here coming into next year to give confidence to our shareholders that we've got a good capital allocation strategy and we know where we're headed and we have a plan for that, and we're currently working on that today. And then about 180,000 shares, which made up about 3.9 million of that part of the transaction. It's important for us to give shares to the seller because they are still involved helping with integration. They're going to continue to be involved in a consultative way for a year. And we wanted to have them some upside and skin in the game to ensure their success along with us. Synergies will continue to be implemented over the year. There were slight headcount changes on their side prior to close. We don't anticipate having any headcount changes internally, meaning we're committed to the 50 plus people that came along with the transaction with us. But I would tell you this, that there are back office opportunities for us to save on. There are distribution costs and leverage there that we're going to continue to save. So we're going to see this EBITDA number kind of fold out about 4.2 million from our Newswire acquisition, coupled with our issuer direct EBITDA that should tail out about 4.2 this year. That gives you an indicator of what we will look like on a pro forma basis for 2022. And then we'll have some guidance and analyst coverage to get you protections here to next year for certain. Media database and monitoring products, and then something called MAP, Media Advantage Plan, which we'll talk about at a very later date as we get into that, both marketing-wise and sales-wise. There is critical mass and margin improvement on news distribution synergies. And so for clarification, Newswire currently today uses one of our competitors to distribute its news. We are going to continue to move that into the AccessWire plan. We deliver that news at a lesser cost compared to what their rate is. So we're going to pick up about 10% margin improvement there in some of those products. So that's something we're going to stay focused on through our integration period, which will likely be about 3 to 6 months in total. We're going to continue to operate the brand separately. I know there was a little bit of marketing out there that said that AccessWire and Newswire have come together to create Access Newswire. And for folks that know us and have heard me talk about this, we're likely going to see the entire corporate branding change here in the coming year as we think about our Newswire business and we think about the business that we're providing access to our customers, to the markets, to shareholders, and everything alike. So you're going to see Access come to life, powered by this wonderful Newswire brand that we've got. And as we said, we're going to continue to look for creative opportunities that bolt into our stable that are directly tied to our communications business and not our compliance business. We're going to run our compliance business as a sidecar and continue to focus on that as there's crossover customers. But all of our investment, sales and marketing and operational folks are 100% in on communications here with us. I hope that I rounded out enough time to leave some time for questions. I will stop talking for a little bit and turn it back over to you, Bobby.
Absolutely. Thank you, Brian, for your presentation here today. So, to give some folks some perspective, because Issuer Direct is not, you guys have been around for many years. I've known you for a very long time. How would you say the Newswire and news distribution industry has changed? And what would you say are some of the headwinds and tailwinds that are facing the industry currently?
Yeah, that's a good question. When folks that may not know this, we got into the news business likely very early on in our journey of a business. I think it was about 2008, 2009. We were actually one of the resellers for a company called MarketWire back then. And MarketWire ended up being folded into a NASDAQ brand that ultimately became Global Newswire, which is out there in the market today, which is, for clarification purposes, the second largest newswire. We examined the business and said we loved it. It went with public company work. Right? You have to run an 8K earnings, you need a press release. So we thought to ourselves, this elongates an opportunity for us to have a relationship with our customer. And we quickly figured out that the news business, although very good and rewarding revenue-wise and profits-wise, it had never been innovated. Right? I mean, it did not crawl very much from putting it on the back of the courier and running it down to the Associated Press and the exchanges to get into the newspaper in the evening. I mean, it was literally running on an XML system that was very archaic. It wasn't based on dynamic, couldn't handle images or videos. They charged per word. So we started looking at this saying, there's an opportunity for us to disrupt, right? So there's this centrifugal force running, this flywheel concept of growth. And we examined the business over 10 years and news incremental revenue grew every single year. So we started to look at the market and say, can we build our own newswire? Very difficult. If you tried to build your own newswire, you'd likely be doing it for 5 to 10 years. And evidence of that is because there's really only 5 newswires in North America. Everybody else is a reseller of somebody. So we found a little company in Canada called AccessWire. And we reached out to them and became a reseller of theirs and talked to the principal there and quickly figured out he was the only one. He had about 12 distribution points and he worked 24/7. So we took over the operations immediately. We built the editorial, we built the technology, we built the back office security compliance and all the things that were needed, went through FD disclosures and approvals with exchanges. And we did all that before we bought it because we wanted to be assured that we understood what the trend of the market was, what the customer need was, and where we could disrupt and be successful. So I think evidence is we've done all that like we said we would, using price to begin with as a leader of flat rate services and no additional costs like the rest of the newswires. And then we kind of examined the FD disclosure world of using Twitter or any other social media platform and thought to ourselves, there could be a risk there. You may actually lose some news business. And to your point, maybe in part of your question, is there a tail off? There isn't any. The news business has continued to grow by 2 to 7% every single year. The number of active private and public companies doing news increases. The dollar values increase. The activity increases. It may not be growing at a CAGR rate like other industries, but for us, we can still grow at a double-digit CAGR because we're pulling market share from these incumbents. They're elephants. They're asleep at the wheel. They're not innovating. They're not doing anything. And ones that have, like Cision and PR Newswire, have innovated so much, they've disenfranchised the customer. The platforms have changed 4 times in 2 years. The pricing models changed. The contacts changed. At some point, people are like, I need to find a better option. We're the better option.
Absolutely. So, another question I have for you, as you mentioned, when it comes to Newswire, it's starting to fill out more of the communications product suite that you're now selling to both current and potentially new AccessWire clients.
Mhm.
What's been the main demand from your client base that they've been pining for, is saying, all right, we got this, we got that, but this is, where we're seeing the industry going, or some kind of tool that we really want. What are you hearing?
Integrated monitoring and a depth of product offering, not to be too terribly simple, but we're fortunate enough to get to the table because of our brand, to talk to companies of all sizes about how we can help them in their communication strategy. And they get very excited about AccessWire. And 90%, not 90, 80% of the time we lose is because they say to us, look, we love your Newswire, but you have nothing else. I'm looking for a more integrated offering. I want media database analytics and monitoring, and I want to plug it into the same Newswire. I don't want to buy Newswire from AccessWire and have to go to MuckRack or Meltwater or somebody else to buy all these other things. So we were losing. Not only were we not addressing the full TAM, we were also then in a smaller funnel, only getting a subset customer that just wanted to buy Newswire. And so that's a great thing. We've grown at double digits, right? And all this time. So we had to invest in these products. But more specifically to your question, is people want a monitoring tool that gives defendability, right? I need to know if I'm spending $5,000 or $10,000 on news distribution with AccessWire or even pure Newswire, whoever it is, what am I getting out of it? Not just a fancy distribution report that says it went to 30 million places today. It's got to give me real data enrichment, and that's what Newswire had to offer. So customers have been asking for this for years. We build product based on customer demand, and we are now buying products and businesses based on customer need and demand as well.
Very good. All right. I think we have time for a couple more questions. So one question I'm asking
Okay.
every company here that's presenting at Planet MicroCap. We're managing through tough markets right now. You just did an acquisition in the middle of a just rough market. But
Yep.
now moving forward, what measures are you implementing to manage some of these macroeconomic pressures currently affecting most microcap companies across the board?
Look, I not to sound reckless about this, because it's a big risk, right? There are companies, both large and small, that are very concerned about what next year is going to be. And I learned from our past and take those lessons with us into what we're about to build as the plan. And in 2008, folks can go back and look what happened to Issuer Direct. We grew 20% plus, right? We found that we have the leverage point to be aggressive on price. We have the leverage point to bundle product. We have the relationships with exchanges and constituents in the market more than we've ever had. And so folks are looking for budget cuts. They're coming to people like us. We're going to benefit from this. Our customer counts are going to grow. Our revenues are going to grow. Our margins are going to grow. And we're going to find ways to be very creative to help our customer. And when we came out of that time, we were able to increase price in some of those folks to get back some wallet share that we lost during the time that we had to give to them. So we feel very confident that we can use that past experience in the future. I would tell you this, though, we're not a heavy organization with people. Anybody that knows us knows that I jump in and do everything. So does everybody here. So, look, if we were 300 people, I'd probably tell you we'd likely have some sort of impact to headcount, but we're not, right? We love our people. We're going to keep them busy. And if that means that we don't operationally have enough work to go around, then we're going to teach them how to sell.
It's funny. I laugh because I'm like, just on the conference software alone, me and you end up talking. So
that's right. Yeah.
So I could speak truth to that for sure, that statement. So final question for you here today. You've alluded to this a little bit already, but just to kind of give the full picture, looking ahead to 2023, from what you can tell us, what would you say then are some of the company's value catalysts that you want folks to pay attention to?
Well, look, we're a big do what we say group, right? If we tell you we're going to hit 40 million plus in revenue, look at that number. If we tell you we're going to increase gross margins to high 70s, low 80s, look at those numbers. EBITDA margins in 20% plus, and subscription numbers. Those are KPIs that we feel passionate about and we run our business to, right? We've delivered those always, and we have for years, and we're going to continue to do that. And look, and when we don't think we can, we're going to be adults and tell people we can, right? That's the way it works.
Very good. Well, Brian, thank you so much for your presentation here today. We really do appreciate it. To everybody watching and participating, thank you, and enjoy the rest of the event.